Today, I want to talk about why Adam Aron doesn't speak out against synthetic shorting. Many are convinced that Adam Aron is a hedge fund plant or is paid off, but Roger Hamilton, the CEO fighting back against the shorts, has said that actually he himself has become an even bigger target for speaking out, and that his company has been pushed down even further than it would have had he just kept his mouth closed. So stay tuned and let's make some money. Now I'll dive straight in with the key information. So, Roger tweeted saying from January to March, I was extremely vocal about our GNS fight against synthetic shorts. April to June, I've been forced to be much quieter, despite plenty of progress on the legal front, the spin-off, corporate actions, and the company growth. But why? Well, as Christian warned me that CEOs who went public in the past with their fight against Wall Street came under attack and became the target themselves of an investigation by the very institutions that should be protecting us from the market manipulators. He's basically saying that by calling out Wall Street fraud, the SEC actually decided to investigate Roger. And he said it didn't take long for our GNS to also be targeted, with me personally finding an arrow on my back, and I've been effectively gagged from speaking out. And he said, I've thought long and hard about this, as we've now become the victim to the same death spiral we were in last year by being intimidated into silence, at extreme cost to our company and to our shareholders. And he said, I've seen many other good company CEOs also being silenced and retail investors losing out as a result of what's going on behind the scenes. He said, I've decided I'm willing to risk speaking out again for the sake of our team, our shareholders, and my own integrity. And I'm going to share full details in a live Twitter Spaces. Now, this tweet is basically saying that if CEOs like Adam Aron actually speak out on synthetic shorting and Wall Street fraud, their companies become an even larger target and get pushed down even further. It's likely that actually if Adam Aron had been speaking out about fraud this entire time, two things would have happened. Number one, it's likely nothing would have happened, just like so far nothing's happened with Roger. And number two, AMC would be trading even lower, likely below $1, maybe even below 10 cents per share. The shorts would have focused on shorting AMC even harder had Adam Aron spoken out. And even if he did, it's likely nothing would have happened, as is the case with GNS and so many other companies trying to fight back against synthetic shorting. And that's also why Ryan Cohen is the exact same and never speaks about synthetic shorting, just like Adam Aron doesn't either. Many that call Adam Aron a hedge fund plant or a paid off shill should be saying the exact same thing about Ryan Cohen too, because neither of them speak about synthetics. And for those that do speak about synthetics, like Roger Hamilton, well, their companies get destroyed even further because they become an even larger target. And it seems that actually other CEOs have the exact same problem. This person asked Roger saying, I want to have a conversation with you so bad. I'm experiencing an interesting conflict about speaking out as well. I hate this. And Roger said, yep, we're all stuck between a rock and a hard place. It's part of their strategy. Let's talk. So obviously part of the hedge fund strategy is to specifically go after any of these CEOs that actually try speaking out about synthetic shorting. They crush their company twice as fast and twice as hard to try and shut them up. Deanne also tweeted saying, I've heard other companies such as MULN have also been warned to not be vocal about the naked shorting. She said, our government is corrupt. The SEC is targeting companies that speak out about synthetic shorting. That is happening to them, which is insane. And that's why Roger is going to explain all on the truth of why he's had to be silent for the last 10 weeks. He said, if you're a CEO or investor in a company under attack, this one's for you. So it finally makes sense as to why Adam Aron doesn't speak out on synthetic shorting and deny synthetic shares at every single instance. Effectively, it's just to protect us. Because he knows that if he had been speaking about synthetics and about Wall Street fraud this entire time, not only would have nothing likely happened, but also AMC would be even worse off. AMC may have been trading below 10 cents per share and may have actually gone bankrupt if the lenders recalled all of that debt. Also guys, you can currently get a guaranteed free share of Tesla or of Google and a $100 cash reward by signing up to MooMoo using the link in the description below. If you just want that $100 cash reward and 5 free shares, all you have to do is deposit $100. If you want that guaranteed free share of Tesla or of Google and $100 cash reward and 15 free shares, just deposit $5,000. You could always use those free shares and cash reward to buy more shares of AMC and GameStop if you so chose to. However, even though Wall Street is trying to silence these CEOs, these shorts are even more scared, as we're now in phase 2 of the squeeze, which I'll explain in a little while. Darren tweeted saying, similar to hearing the ocean through a seashell, if you put your ear up to this article, you can hear the audible screams of hedge funds. This article on Investor Play says the meme stock frenzy is over, sell these 7 meme stocks now. Obviously including in those 7 meme stocks to sell is AMC, GameStop and interestingly, Carvana, Plug and many others. The article says you may think a call to sell meme stocks now is an overreaction. After all, a fair number of meme names have performed well lately, suggesting a renaissance of sorts for this investing trend. It says in fact some long-standing meme plays have bolted higher, thanks to rising optimism that macro concerns like high inflation and high interest rates are entering the rearview mirror. However, it's important to note this has been a partial resurgence, not a full comeback. Plenty of past meme kings have continued to struggle. Not only that, the aforementioned meme stock rallies may prove fleeting. I think this is a last-ditch desperation attempt by the hedgies to try and convince you to sell your shares before the next phase of the squeeze. Now, as I've explained in previous videos, there's kind of 4 separate stages to this squeeze. At first, you have the shorts closing out of their smaller positions in large tech stocks, seeing a tech stock squeeze, which we're already seeing. That's phase 1. I said phase 2 would be the shorts then closing out of their next lower risk position, which is their short positions in low cap gems like Carvana. And that is exactly what we're now starting to see, as we're seeing stocks like SPCE, MULN and NKLA all running in the pre-market this morning. SPCE or Virgin Galactic was up 40% this morning, MULN up 17.6% and NKLA up 15.71%. So these smaller cap stocks are now also starting to experience their squeezes. And the next phase after that, phase 3, is for the smaller meme stocks to squeeze as well. At that point, you're going to start seeing stocks like Clove, Nokia, BlackBerry and many others also having a run up and maybe their squeeze too. Until finally you've got phase 4 out of 4 of the squeeze, which is those largest, most riskiest meme stock short positions that will be closed out of, causing the squeeze. But obviously we're not quite at phase 3 or phase 4 just yet. Now, I saw this very interesting tweet from Ignatius that says companies can buy political parties with campaign contributions. It's always been so and expect nothing to change. But those political parties will fire the SEC chairman if he does not dance to their tunes of the campaign contributors. But this is the screenshot I found really interesting, which is the largest contributors for the 2022 cycle. Obviously up at the top with $179 million donated is Soros Fund Management. A few points down after that, we've got obviously FTX and then obviously Citadel and Susquehanna. Obviously, Citadel and Susquehanna are massive donators to the SEC, the Fed, and everybody else to ensure that everyone is still doing Citadel's bidding. But another interesting one I wanted to focus on this list was obviously FTX, who donated $75 million during 2022. And as a result, you may have seen this new article just released that says the US offers to drop some charges for now against Sam Bankman-Fried. The article says federal prosecutors in New York said they would drop several criminal charges, at least for now, against disgraced crypto executive Sam Bankman-Fried, if the judge agrees to try him later on those charges. The offer to sever 5 of the 13 charges followed a ruling earlier this week in the Bahamas that allows Bankman-Fried to challenge the additional charges. This is obviously exactly what we expected all that time ago, which is that gradually all of these charges against Sam Bankman-Fried will likely be dropped. As he's in the media less and less and less, I think one by one these charges are going to start dropping out until he's not charged with anything whatsoever. The CEO of one of the largest heists or frauds ever will effectively face zero punishment due to his donations to the SEC and to the Fed. But finally for today, something that is also making those hedge funds very, very scared is this tweet from Finance Lancelot. He tweeted saying all of the money escaping crypto is flowing right into meme stocks. It's likely that many retail investors that were heavily invested into crypto, especially as crypto continues trending downwards and more fishiness is discovered with Binance and with Coinbase, that those retail investors will start pulling their money from Bitcoin and looking for the next large return potential. And obviously the next potential investment with a very large potential return is obviously going for squeeze territory. And that is why many of those investors will be withdrawing their crypto cash and investing directly into GameStop and to AMC. And we also know there are many very wealthy crypto millionaires that have been built over the last 5 or 10 years that I think would be very much welcomed into the AMC and GameStop communities. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell because that way you'll be alerted when I upload a new video. Cheers.